Good morning, everyone. Happy Friday. Welcome to another episode of Cass's Financial Outlook. I am your host, Cassandra Collin, and today we're going to be covering tax planning for small business owners. For any of you guys who are looking to open up a business or have a business currently, I think this would be a very good way of planning your taxes for the year. So before we begin, we're going to cover our disclaimers. I am not a financial advisor, nor is this financial advice. This is just solely the outlook that I have on this topic. And I actually did used to have a business a couple of years back. So I did used to file as a sole proprietor. So whenever I was doing my taxes, I had to file my 1099s. So we're going to cover a little bit in regards to that too. I actually do have some of my tax returns, but we might not get into the nits and grits of that. We're just going to cover the basics of what I did when I did my tax planning. So one of the critical things whenever you're a small business owner is understanding the strategies that you have available to you to save money. So the biggest thing that people don't understand is how deductions work. So obviously before you go into business, you want to establish the type of business you want and the structure you're going to use. So for example, sole proprietor is one of them, partnerships, LLCs, and then you have your S corporations and C corporations. So they all have different meanings and they all have different brackets, which means the tax obligations are different for all of them. So you do want to research more in regards to which one is going to be most beneficial to your type of business. So each of them have their own tax implications, and it's worth consulting with a tax professional to determine which one, again, will benefit your business the most. Whenever you go to a bank, you have tellers who usually advise you on which accounts are going to be best for your business. Same thing with your business structure. Maybe you want to talk to somebody who is a accountant or somebody who is a lawyer when it comes to forming documents, and they can probably guide you a little bit more on how to do this. Or obviously financial advisors, anyone who actually has a background in finance and business structures will be a good resource for you to understand which one will be best for your business in the future or for any current ones, because I know there's some people who might already have a current business but they don't actually have any paperwork in place, and it's important to have that paperwork in place because again, at the end of the year, you want to make sure that your tax runs smoothly and you don't get into any altercations with the government. Now, the second thing is you want to understand your deductions. So for those of you guys that didn't know, your home office can be a deduction if you work from home. So sometimes business owners, they start off from their own locations and they don't have a physical office. So if you have a home office, you can use that as a deduction. So if you use part of your home for your business, part of that home can be written off under your housing expenses. So that can be a deduction at the end of the year, which again, that affects your gross income or your taxable income. So the other thing you also can include is vehicle expenses. So if you use your vehicle for business purposes, so let's say you do deliveries, or let's say you travel for business, you have business meetings, XYZ, you can actually deduct a portion of your vehicle expenses. Or you can also do miles rather than like gas. So you want to make sure that you understand the difference between vehicle expenses, because on some of the tax deductions, you can actually do miles versus the actual amount of expense that you had. And depending on how much it was for either one, it can go a long way to compare which one would work better for you. Now, office supplies is another one. So if you bought pens, paper, printer, you also can include your laptop, phones, even this, right? Any equipment that you actually bought that was used for your business, you can deduct the cost of the office supplies and the equipment that you are using for the business. So you can actually look at some of this in section 179 under the deductions portion if you go to the IRS website, and it'll tell you which ones can be written off and which ones cannot. Now, the other one you can also include is travel and meals. So if you do business travel, you can actually use that as a deduction. You can deduct up to 50% of your business meal expense. So if you spend $150 can be used as a deduction. You can also include what's called the self-employed health insurance. If you didn't know, you can actually get self-employed health insurance, and this one is a deduction. So the premiums for health, dental, and any long-term care insurance for you or your family can be used as a deduction. So I know that in previous episodes we did cover a little bit more about deductions and which ones can be used depending on how you're filing. So listen to that one too. If you're married, filing jointly, married, filing separately, all of that also does make a difference. But again, these are some of the things that you can use as deductions if you're a business owner who's operating out of a home or with your vehicles or you're traveling. So keep that in mind whenever you go and do taxes. Ask about those things, because there's some places that don't even include any of this, but realize that there's so many different things that you can include to, again, minimize the cost of your taxes at the end of the year, because you're investing into your business, which again can be used as deductions. Now, the next thing is take advantage of your tax credits. Some credits that are available for small businesses are the Small Business Healthcare Tax Credit, the Work Opportunity Tax Credit, and the Disabled Access Credit. So these are tax credits that you can take advantage of as a small business owner. And obviously that's not including the child tax credit for those of you guys who have child and are filing married jointly. Now, another great way to also lessen your tax bill at the end of the year is to contribute to retirement accounts that are tax deductible. If you're not familiar with them, if you're self-employed, you can actually get a simplified employee pension IRA, so a SEP IRA. It's abbreviated SEP. Or you can also do a solo 401k or a IRA. So these are all different things that you can do. Obviously, you can also invest into Roths. So we covered these a little bit earlier in the season. But at the end of the day, hire a tax professional. Tax laws can be complicated. They change all the time, and tax professionals will be the best person to go for advice when it comes to the tax benefits, just to avoid any mistakes, because small mistakes can result in penalties. And what you don't want is to get audited by the government and then you don't have any backup on why you submitted certain things in your tax return. So whenever I was doing my taxes, I always kept a good record. So that's going to be the last thing that I want to say, is always keep good record of everything, your receipts. You have QuickBooks now. Back in the day, I'm sure there wasn't all these different apps that we have now. If you don't like Excel sheets, hire someone who does and have a P&L. A P&L is a profit and loss statement that shows exactly what you've spent and exactly what you've earned from your business. I used to have everything in one account, so I did it all under my personal account, which I don't recommend doing. I wish I would have kept things separately. I wish I would have had like a business account versus my personal account, but I had everything all together. Had I kept them separate, it probably would have been a lot easier on my accountant to keep up with all that stuff. But what she would do is pretty much every single month, she would sit down with me, review all my numbers, and she would tell me where I was spending the most. So she would break it down in percentages. This month, you spent this much on groceries, going out. What I realized was I was literally spending way more than I wanted on quote unquote my business meetings and the business meals. So what I had to do was cut back on business meals, and I had to invest in other areas of the business rather than just on the meals. I know that we can get carried away on the food, but again, knowing where you're putting the money at and where it's going can help for growth in the business. So it's important to strategize when it comes to the P&L, but that's what I would do. And the reason why I had a P&L is because at the end of the year, it made things so much easier for me to understand how much I spent on gas. And usually what I would do is I didn't really track my miles, but the way that I would do it is I knew how much I was spending on gas. So I would take essentially the average of what a gallon cost. And this is probably too advanced for some of you guys, or maybe you're like, why would you even do that? But again, I kind of based it off on like my average commute and the cost. And then that kind of gave me an idea of how much I was traveling in miles. Or what you can also do is, I guess at the end of the year, you can count how many miles you ended with versus how many you started with. And then you can take a percentage of that and figure out how much of it was for work and how much was personal and leisure. So there's so many different ways that you can keep track of things, whatever works for you. Make sure just keep it somewhere where you know where it's going to be, because again, if you do get audited by the IRS, you want to be able to provide documentation that backs you up on why it is that you submitted the tax deduction or the claims or the credits, right? So just remember that planning for taxes can be simple as long as you are organized, and everyone's situation is different, everyone's business is different. So just consult with a professional, and everyone's situation again is different, so they will give you more insight on what is going to be best for your specific business. So again, just consider working with a tax or financial advisor. I work with my H&R Block lady. She usually does one-on-one meetings with me on a yearly basis on top of the planning of the tax season. So I always tell her, this is what's going on. This is exactly what I think I'm going to do for the year. How should I plan for it? What should I expect next year? And she gives me insight on where to go based on those conversations. So always keep up with the new regulations, because I know that things do change all the time. So it's important to make sure you understand where your business is going and how it's going to affect you if there are any changes when it comes to the IRS laws. So that was a quick overview on how to plan when it comes to taxes for small business owners. Again, I am not a financial advisor, nor this is financial advice. This is just solely what I've done. And these are some things that have helped me. And I definitely did use a lot of the deductions when it came to taxes at the end of the year. So at the end of the year, I did use my home office, and it was actually during COVID. So I definitely did have to write off. When it comes to home office, you can actually do your bills, your rent. So part of it can go towards your deductions. And the vehicle expenses, since I was commuting a lot, I was using my miles. I was tracking my miles. I didn't really buy a ton of office supplies because for me, it was just mainly my computer. So really the only thing that I could write off was my internet. And for meals, if I did have any business, like I said, I did spend a ton on meals, so I was writing those off. I didn't have any health insurance at the time, so I think I got penalized for that. I don't recall, but I would have to check my tax return to see if I did or didn't. But I know that if you don't have health insurance, there are some cases where you could get penalized, but I was contributing to a Roth, so that was one of the ways that I was also able to reduce my taxes at the end of the year. And I definitely did take advantage of the tax credits as well. So sometimes there was years where I didn't actually have to pay taxes because I was getting credits back, right? I had my child tax credits, I had my school credits, and then obviously I had my small business owner credits. So there's just so many different ways that you can go around taxes where you don't even have to pay because your credits can pay for your tax at the end of the year. Remember, if you do have any taxes that you have to pay at the end of the year, but if you have credits, it cancels those out because it's taken out of the credit, and then the remainder portion is given to you. So that was a small overview of tax planning for small business owners. So again, thank you for tuning in on Cass's Financial Outlook. I hope you guys have an amazing and lovely Friday. We will see you here next week. Don't forget to follow us at Cass's Financial Outlook on our YouTube channel. We are obviously on all platforms. Please, I encourage you guys to engage in the comments on what it is that you want the next topics to be. I did actually want to go into details in regards to retirement accounts and how they grow. So there's some people asking how it is that you can increase your net worth, how it is that these accounts actually work, how do they even earn the interest, and all that good stuff. So if those are things that you guys want to be learning about, then let me know and we can dive deeper on how 401ks, Roth IRAs kind of differ and how a certain amount can make a difference on how you will retire with 1 million versus 4 million once you have your retirement age. There are calculators for that. But again, thank you for tuning in. You guys have an amazing day. We will see you here next week.